for this. All right. So accumulation zone. Like I said, guys. All right. I didn't do a PowerPoint for this one. I'm gonna just show you, give you a sneak peek of what this is and how this can help you actually. Also, this is good for identifying the trap moves, for identifying the anchor point of the week, and obviously this is gonna show you how to use the ADR X3 and how to swing trade and trade away from the anchor point. All right, so let's begin. Okay, so for this, start looking at the weekly cycle on the 4-hour chart. All right, block the first 8 hours of the chart on Sunday. 2 bars. What the hell are you talking about, Cash? I'll show you. So on Sunday, Asian session, it's 2 bars, right? So there's gonna be 2 bars. The one from market open from 4 p.m. my time, 4 Central Time, 4 p.m. to 8 p.m. and then 8 p.m. to 12 a.m. Right? Let's just say this is a red bar, and say this is a green bar. All right? Bear with me, guys. Bear with me. Okay, and let's just say oh crap. Well, I did it wrong. Okay, so this is a green bar. All right, want to show you others. All right, pretty cool trick. This is a red bar. All right, so on the 4-hour chart, so here, once these candles are closed, I want you to do this. Let's just say these are the first 2 4-hour bars. This one and this one. All right, this is what I want you to do. I want you to draw some type of support and resistance trend line. All right, let's just say these are the two bars. All right, let's just say these are the 2 bars. All right, okay, just showing y'all what I want you to do. All right, okay, so back to here. All right, so you're gonna draw that support and resistance. I know it's ugly. Remember I said I failed art, so I'm sorry. All right, do this. All right, watch now. Watch. This is the Asian session, right? 2 bars, okay? This is a doji. This is just an example, all right? And then they do this. These are all 4-hour bars, all right? Okay, let's see. Don't believe you. Look, look like Picasso. Hey, thanks for the compliment. I wish. All right. Okay. So here's a cool trick, guys. All right. So this is a little advanced. This is gonna help you out. All right. Let's see. All right, guys. Anyways, okay. Now watch this. Well, actually, I'm not gonna draw the pattern yet. I'm gonna just keep drawing the candlesticks until you notice something. All right. Keep in mind these are all 4-hour bars. All right. Bam. All right. 4-hour bars usually like this most of the time. Okay. And then another one like this. Okay. A green bar. Another hammer. Well, not a hammer, but like a doji type of candle. And then this. Okay, so you get the point now, right? Okay. All right. So, all right. So this. So here, this is, remember I said this is the support and resistance lines that I said that are going to be drawn for the whole week, right? Okay. So pay close attention, guys. You are trying to understand the dealer's behavior when he forms the low of the week. You then have a direction of bias for the next couple of days, 2.5, 3 days, depending, right? He can rise 2.5, he can rise for 3 days, all right? Okay. So this is the accumulation zone phase. Excuse me. This is the accumulation phase, the Asian session of the week. Sunday is the Asian session of the week, guys. After the false move week beginning, you trade away from the initial high of the week. I'll talk about that right now, okay? Just want you to listen. There are 3 variations to the pattern. If you want to write this down, let me know to give you some time, all right? There are 3 variations to the pattern: micro, mini, and standard. All right, so kind of like micro. So a micro zero, you kind of like a lot. You see that's a micro, okay? Mini, a 10 cent, and then a standard, the dollar lot, right? A full dollar, right? Okay. It's the same thing with these patterns. There's a micro, a mini, and a standard. Okay. All right. So micro view of price action is the little patterns, intraday pushes, the ones I talk about all the time, right? Okay, where they come here, they do a W1, 2, 3, right? And then they pull back and do another M, and then they reverse and end the week in consolidation. Excuse me, the day in consolidation back in the Asian range. Okay, so that's the little pattern I'm talking to you about. Okay, that's the micro. Okay, that's the micro view. The mini view of price action is the entire day collectively. Stop hunt low rise, stop hunt high drop, end the day back in consolidation. Intraday structures and patterns. So okay, so this one, so you see 1, 2, 3. So this mini view is the whole overall day. Okay, so let's say this is the micro, and then they do this. Okay, so same. So we're gonna look at the whole day. All right, 3, and then do this or whatever they do. Okay, so this picture right here is the mini view. All right, the whole day, the whole 24-hour day. All right, the micro, really, you can probably just use it for like one session. All right, so you can use this as a one session here. Mini view can be the whole, this is the whole day. All right, I don't want you to get them confused. All right, okay. And the standard view of price action is looking at the course of the week, which is the same pattern over 5 to 6 days, the entire course of the week. All right. Okay, so back to this. All right. So block off the first 8 hours of the beginning of the week. So, okay, so tonight, when the 2 bars show up, you can draw your support and resistance lines. All right. Well, yeah, pretty much like this, kind of like that. All right. The first 2 bars are the market maker spreads for the beginning of the week. These are the psychological support and resistances. These, all right. Okay, so now let's talk about the standard B. Okay, false move week beginning. They come here. They give this doji. All right. Pay attention. Pay attention to this. Okay. They come here. False move week beginning. Right. Sunday coming into Monday. You see how on the 4-hour chart, this is railroad tracks, right? Railroad tracks, come back here. When you identify this right here, you found the anchor point. Or what the hell? Okay, what do you mean now? All right, the anchor point. I'm talking about the actual anchor point of the week. All right, so bear with me. All right, this is gonna be a little crazy if you actually look at this. Okay, so W. So what's the pattern? 1, 2, 3, right? BVM. So level 1, level 2, and then right they go to level 3. And most of the time, not always though, I've seen that price comes back here, back into the range, back where they started. These are all 4 hours, all right? 4 hours. Just remember, all 4-hour bars. They come back into the range. Now, here's where you start using your ADR times 3, which is, oops, where is it at? Okay, which is this tool right here. 3x ADR, 314. I'll talk about that right now. Okay? Excuse me. Okay, so you are trying to understand the dealer's behavior when he forms the low of the week. Like I said, you have a directional bias for the next couple of days, 2.5, 3 days. All right, so let's go back to art over here. Okay. So if ADR, if you're gonna swing trade, well, swing trade, yes. If you're gonna swing trade, if ADR X3 is met or not met, but the 3-day time window is, and you get an outside structure high, you better take your money. What do you mean? Outside structure high. If you came here and you found the pattern 1, 2, 3, and they start making a W, kind of like an M, but kind of on the 4-hour, it'll probably be railroad tracks like this. On the 3rd day, ADR has not been met, but the 3-day time window has met. You take your money, you get out of that trade. Okay. So finding the anchor. The anchor or peak formation high or low is where the MM starts their moves after trapping volume. Most of the time, you'll find the anchor usually in level 3, level 1 in a reset. This could be after 2 to 3 days of rise or fall, but up to 5 days. All right, so just over here, a quick overview. So level 3 or the 3rd day of the movement cycle is usually very choppy, all right? So this move right here can start being really choppy, okay? The best way to know when the peak is locked in, the peak formation high or low, which is this, okay? On this occasion, I have said 25 to 50 pips, right? But on these, because this is a larger structure, a larger time frame, the best way to know when the peak is locked in is when the next night they pull it off. They pull it off next night or the next day, 50 to 75 pips, go into consolidation and hit the stops high drop or hit the stops low rise. Okay. Market makers trap traders on the first day of the trading week and tie up your margin for the remaining days by aggressively moving away from the low or HOW. Low, what is that? The low of the week and the high of the week. Okay, all right, Briscoe. Have a good night, buddy. All right, guys. Okay. They will trade above or below the previous peak, possibly using it as the high low of the current week. All right, so here's something important also. The objective is to stay above or below the perceived support and resistance level for at least 3 days. So their objective is to stay away from this area. If you're trapped here, remember what I said? If you're trapped here, you might as well buy some Red Bull because you're not getting out for 2 to 3 days. So this is their objective. So this is everything I've been talking about since the start. This is where it all starts applying. All right. False move week beginning. You get trapped here. You're now stuck for 2 to 3 days. The objective, now that you understand this structure, the standard structure, you now know the objective is stay above or below this perceived support and resistance. These two black lines. These two black lines that I told you, the support and resistances, for at least 3 days. All right. So I knew this picture was gonna come in handy. Oops, let me get some of this off. This is one of the trades I took. I showed this on lesson 3, but I'm gonna show it to you again. I didn't talk about it, but this is how I did. You see how I drew my lines? They're there just to prove to you. Just keep in mind this was back in June 27th, so I can't go and Photoshop this. All right, I can't go and Photoshop a support and resistance line. All right, so you don't think I'm a maniac. All right. So what did they do? False move week beginning. They came here. They did this. They did a beautiful W. They did a beautiful W in London. I entered right here. Okay. What did I expect? Stop on low rise, stop on low rise, reverse, right? I identified this on the 4-hour chart. I drew my support and resistances line like these. They came here on the 15-minute chart. It looks like this, but trust me, on the 4-hour, it looks like these two candles like this or something like this, like right like that. Not a big deal, but here it looks a lot. But anyways, I identified the anchor point. I was okay. I held this trade for a while. I even entered here again, coming out of this line. 2 full bars are on my favor for this entry. I was okay. All right. So this is how you start putting the pieces of the puzzle together now that you know this, okay? Go back here and get some of this out. Okay, I mean, give me some couple of minutes, couple of seconds, sorry, get some of this out. Okay. All right, so once you identify the anchor point of the week, okay, do not counter trend trade against it. All right. So here, you see how they kind of did these pins to kind of trick you, got those guys, hit their stops. In hindsight, you probably would have thought this was a M, excuse me, an M. Remember, don't counter trend trade back into the range. You would have got stopped out somewhere around here and look, price rose aggressively. All right. Okay, so a little bit more about the anchor point, all right? Because there's variation on the theme, of course. Okay, let me get my little pen right here. Okay. Don't say that here. Okay. Pay attention, guys. This is a variation on the theme also. if he anchors in on a Tuesday and rises Tuesday U.S. session, which is half a day, he's gonna rise Wednesday, Thursday, and complete the cycle on Friday. Okay? If the dealer anchors in early because he completed the pattern, a different part of the previous week, you're going to still be looking for trades away from the anchor point going into Friday if he issues you the signals. All right? So just want to draw you a quick sketch about everything I've talked about, right? So this is Sunday, Monday, right? Come here. Remember what I said? Breakout traders get rewarded here on this day or on this part of the cycle. Okay, not bad. Good for them. So now they pull aggressively. D bottom or W, false move with beginning. Now these guys are trapped, right? Okay. So we're going to fast forward to 1, 2, 3. And then same thing, right? 1, 2. Okay. False move week beginning. This is the next week right here. This is Sunday, Monday. All right. We're going to start looking at the next week projection now, okay? Remember how I said in the beginning that they're not going to come here. So market makers probably going to do this and then come right back up immediately. Not releasing these guys' mistakes from last week. They will not come back here because they don't want to release the traders from last week. The ones who got their trades wrong, they're not going to come here and release these guys. Okay? Like I said, the objective is to stay above or below the perceived support and resistance at least 3 days, causing exhaustion and panic. All right? And same thing here, like I said, level 1 or level 2 are where you always expect straightaways, all right? Not M's and W's, unless it's a W with the trend. Like I said, remember, if it's going up and there's a W with the trend, go take it, all right? All right, any questions so far on this? I know it's a little kind of like teasing your brain because this is something new. If you have any questions, just let me know, all right? And if you have to go back to the recording, which I am recording, feel free, all right? Just let me know. Just write it on the chat box if you have to. I'll wait.
So basically, it's just kind of looking at the bigger picture and basically looking at the patterns on a bigger time frame.
Okay, when I was explaining about the 4-hour candles, right?
Yeah.
Okay, cool. Give me a second.
That's kind of just looking at like the same pattern that you would see on the 15-minute, but on a higher time frame.
Yes, exactly. Okay, so.
And basically with standard, you're just talking about like the weekly cycle and not just looking at one specific cycle.
Yeah, so like I said, the standard view is the overall weekly structure, right? So this is where you have on this. So on the 4-hour, okay. So Lisa had asked me about Euro AUD, right? Look at this. Where's Euro AUD? Let's find out this one. It's Euro. Okay. Isn't this the same thing I'm talking about right now? Right? 1, 2. Right? Isn't this the same thing? Isn't this the same pattern on the? Oh, excuse me. 1, 2. Isn't this the same pattern on the 15-minute?
Yeah.
Mm-hmm. It's the same thing. No matter what time frame, it's the same thing. So this is what I want you to understand. So level 3 chop, all right? This is when you start adding the bigger time frame, all right? It's going to take a little while. So once you master the mini V, you can start moving on to this one, all right? So I just want you to show you. So look at this. Same thing. 1, 2, 3. This is how you start learning how to swing trade, all right? Okay, let's see. Nope, all good. Okay, Sile, cool, cool. So yeah, Nathan, same thing. The same
All
thing.
right,
Uh-huh.
that was it.
Okay. All right. Let's see. Looks like everybody's good to go with this one. So let's do another let's do one more example, all right? With my drawing, because I don't have an actual picture. Or I think I do. Give me a second. If I do, it's gonna be awesome, but give me a second. I might have one. If I do, you guys are lucky. Let's see. Oh, gold. Gold. This is the 4 hour structure, all right? Same thing. This is on the upside now, shorty, because I know you're like knowing downs and up. I know, like you know, excuse me. I know you want to know both sides. So here's one on the upside, all right? The same thing, right? You draw your lines, all right? 1, 2, 3, and you see this here on the 4 hour. They start rising, and look what they did. They ended back on the week. Look at this gap. It's ugly, by the way. You see, this is why we don't hold trades. So swing traders, if you would have held since here and not closed, you would have been back in here. No profit seen. However, this is when you start exiting, all right? Look at the bigger time frame now. The same pattern. Remember, block out your perceived support and resistances here. 1, hit the stops high, drop. Hit the stops high, drop again. 3. This is when you start looking for your, like I said, your exit here, all right? 4 hour bars, all right? 4 hour bars. All right, good stuff, guys. Let's see if I have another picture. If I do, awesome. Okay, same thing. Another picture. Okay, perceived support and resistances. Railroad tracks. 1, 2. All right, so see how they won't always give you 3 levels, like I said, right? They won't always give you 3 levels, okay? So I want you to understand that, all right? So 1, 2. However, they came here though, all right? So this is probably like a Tuesday night, Wednesday, all right? They started chop, level 3 chop, right? Level 3 chop here, or level 2, 1 and 2, 3, but there was no 3, all right? So when you start noticing this here, you're like, man, okay. And look what they started doing. 1, 2. And you see how they ended again back in the range? This is a weekly structure. They came back in. They pretty much a big fat W and came back in. The same place they started the week. This is all they got, guys. This is all they got. They have nothing more with them. It's the pattern. The pattern is the strongest thing in this method. Okay? See, I'm sure I have one more. All right? Same thing. Same thing. All right? Psychological support and resistance right here. They came down. W. 1, 2. Remember, they don't give you 3 levels. They didn't give it to me here again. That's fine. That's fine. All right. So what is it? Hit stops, low, rise. This is your exit here. All right. Swing traders, if you're swinging, this is your exit right here, somewhere around here. All right. If your ADR X3 has been met, if it's 300 pips or so on and so forth, if it's been met or the 3-day window time has been met, time window has been met, your exit is here. All right. Okay. Most likely the ADR was met because of this bar. Trust me, this is a lot of pips in one bar, all right? So if your ADR was met, but not the 3-day window, your exit is here. Somewhere when the ADR is met, all right? But anyways, M, 1, 2, 3. Back again where they started, guys. Look at this. These are actual charts, by the way, all right? Back in the range. Back where they started. So,
Oscar,
yes.
tell me, bro, how do you know if the 3 times ADR has been met?
Because you look at the, I show you. Get my pen. Okay, so this is what we're expecting, right?
Yeah.
314 for 3 days. All right, okay. So this is gonna be kind of like a math question, not a math question, but more of like a math thing. So what I do is example. Let's just say this was a false move beginning. All right. So we expect 314. All right. So the first day, let's just say they do 100, like 100. The second day, stop hunt high draw, stop hunt low rise, 200. So you know by the okay, so if the ADR value was 105, let's just say if today's range it only meets to 79, all right, 79, you count that, all right. This is what I do, all right. Okay, so 79 pips move. All right, awesome. Okay, the next day, I look if it's been met or not. If it hasn't been met, I just count the pips it met. Okay, let's just say it was not met. I'm like, okay, so 59. All right, the next day. So I have these pips counted already, all right?
Okay.
Okay, the next day, level 3 or third day of the cycle. The ADR is 105, let's just say, and it's 101. Just giving you the harder example, just in case this does happen, because it can. So I count this. Whatever this number is. However, remember how I said if the if the 3-day time window has been met, or the ADR. So if this equals this or more, this is your exit. These 3 numbers, all right? So either the ADR has been met or the 3-day time window.
Okay.
So this is how I do it, okay? So I really just count these numbers manually, all right? So I just look at today's range. Okay, so it's 105. I just look before the time ends. Remember, these reset every day at after New York, at the EOD at the end of the day gap. All right, they reset every day. All right. So I'm like, okay, so it was 105. I look at it before it closes. Okay, it didn't meet. It was plus 65. All right, so I got that number written down, plus 65. And then you look at the, so on and so forth. So this is how you start getting your pip count like that. All right.
Okay. Okay.
Where are you getting these numbers? Are you just counting the pips it moves?
Well, these are just examples. If like this right here was just examples. If
Oh, okay.
yeah, like let's just say this was 105 and today's range so far. So this is so far. It has only moved 39 pips. All right. So if by the end of the day they finish and move like 89, That's how much they moved, and the ADR has not been met. Most of the time, it says today, has it been reached? It'll say yes. So far, it says no because the day hasn't ended, right? Okay. So when it says yes, you know, you already know it's been met. You're gonna have your two red lines like this, like blown out, price blown out like that. All right. I know you've seen that before. All right. But yeah, that's how you do it. Okay.
All right, cool.
Mm-hmm.
Okay.
All right. So where was I? Okay, yeah, so here, got that one down. Next. Yeah, I think that was actually it. All right, guys. This was just a sneak peek. Like I said, there's much more to it, but I just want you to start understanding and look at the bigger time frame now. All right. So one, but however, if you haven't mastered the mini view yet, please, I want you to do that first before you start learning how to swing trade. All right. So I want you to understand the smaller picture first. All right. Okay. And then you'll
Okay.
start learning how to swing trade. All right. All right, guys. So this was the lesson for today. Um, we're gonna have our next lesson again on Tuesday. If I want to see us, okay. So this week, so Sunday, Monday, these are trap days. However, if you can take, if you want to take some trades, feel free. And if you do, I want you to screenshot your trade, your entry, and then I want to see what happens afterwards. Okay, everyone. This goes for everyone in here right now. I want you to screenshot and tell me how it went so I can share it with the class on Tuesday. So now, this week, we're going to focus on trying to learn from your mistakes, all right? So now that we did the homework, now let's see you go into play, all right? I want you to take trades, all right? Risk management, important, all right? When learning, all right? Because I know some of you guys are still learning the method. Some of you guys here already have, kind of a hands-on on the method.